Hello, everybody. Welcome to Housing Bubble 2.0 News of the Week, or as I like to call it, another episode of As the Virus Turns the Housing Market. Seems like we've got some other things that are wreaking a little havoc across the nation right now. I hope everyone is safe and doing well amidst all the chaos over the weekend. We won't really touch too much on that at this point in time, maybe in the future to see how that affects housing. But right now, I think we have enough to talk about. I was so busy last week. I was out in the field doing a lot of actual physical real estate things. Didn't have a chance to do more videos, so I apologize on that, but that's what has to happen. You got to get out there and look at the deals and jump on stuff when they are available, and that's the way real estate kind of works. So, by the way, if you're not already a subscriber to my channel, please help me grow and subscribe. I just hit the bottom subscribe button on the bottom right in the video. I'd really appreciate that. Today is June the 1st, so happy month. We enter into a new month, and we'll recap some of last week's news. So give me a sec here as I move to a new scene, and we'll start right now. Okay, guys. Clearly, I like to sort of, work through the, I guess you could call it the unemployment and see how that's affecting real estate. So here we are. So as of last week, middle of the week, we found out that there were over 40 million Americans have filed for unemployment during the pandemic. The real jobless rate's almost 24%. It's pretty big number. And how's that going to affect? Well, we'll see what goes on here. I mean, it just, it seems like it just keeps going up, right? Especially with respect to, even though there's less and less per week, we're still over 2 million a week. And if I take a look at some of the information here, we go down to the latest batch was 2.1 million claims last week. That was down from 2.4 the week before. And we're basically, if we've had 8 consecutive weeks now, looks like, we've dropped 8 consecutive weeks since topping out at 6.9 million. 6.9 million, which was the number one, I guess you say, week back in actually April, March, and we've been working over 2 million on average since then. So it's a lot of people. We're at the 40 million mark. We had predictions early on that we'd hit 30 million, 35. We even have people saying we're going to hit 47 million. So if you think about that, these numbers are not out of the question. This is not a stretch to get there. A few more weeks will be there as well. So a lot of stuff going on. Basically, we're closing in on the Great Depression peak of 25.6% unemployment. So I figure maybe one more week and we'll be there. So not good. Basically, the jobless claims that surged were California, New York, and Georgia were the top 3 that had the claims highlights for a number of claims that were, I guess you could say, filed. So that's the scoop right now. So there's no slowing down. I mean, it's slowing down, but I mean, we still have huge numbers, and that will be problematic for housing. There's a website out there. It's called shadowstats.com, and I actually started looking at this website. It's kind of a interesting website. It basically, sort of summarizes, numbers from all different aspects. If you especially go on the home page, it talks about everything in little blurbs. And what they really do is they put out this sort of weekly or they monthly, we'll call it alternate unemployment. So it really tracks the U3, the U6, and then of course it has the shadow stats, which they, I guess you could say, they like to count in what they call the I forget, they're the disengaged or not interested workers. So our unemployment is actually much worse because after a certain period of time, you fall off of the unemployment statistical count based on inactivity or disengaged workers. So they figure, I guess the government figures after so many weeks or months of you being unemployed, you're not actively looking for a job, therefore you fall off the statistical wagon here. So that's why they believe clearly that the unemployment rate is much higher, 35%, almost 40%. On a going forward basis. So again, that's just perspective on things, but it's a neat website to check out, shadowstats.com. They allow people to publish their information, so I'm giving credit to them, which is very nice. Okay, so of course, once we have that going on, you want to take a look at what's happening in the industry and why we're having such unemployment. So, my perspective is things are only going to get worse before they get better, and we've heard about so many cuts that are happening. So really, we see almost on a weekly basis how the unemployment is still rising, even though the weekly claims are slowing down. We're still hugely above from where we need to be here, and yet more is going to happen. And what I mean by that is, and I see lots of comments and hear stuff out there, and a lot of people are saying, well, it's the renters, they're losing their jobs first, so we got nothing to worry about in the housing industry and stuff like that. Well, I don't quite buy into all of that personally. And when you start seeing some of these other things that are going on out there, okay, if you think the renters were the first wave, well, now we're getting to the second and third waves, which will be the non-renters or people that have, more, I guess you could say, non-service jobs, non-seasonal jobs, things like that. All right. So I think this is where we're going to see stuff happening. So Uber to lay off 3,700 employees. Okay. How's that going to affect people? Well, Uber is a lot of people's prime income. It's also a lot of people's secondary income, which is helping them make ends meet, which may not be there anymore. Hertz. I know Hertz, I think, recently filed for bankruptcy, but they're going to lay off 10,000 staff going forward. Office Depot plans store closures, 13,000 cuts in the next couple of years. Hyatt to lay off, Hyatt Hotels, 1,300 employees as pandemic cripples travel. I mean, that's going to keep going on and on and on. I found this interesting website. It's called dailyjobcuts.com. And basically, the recent update is Friday, May the 28th. And it basically has a little daily blurb here of what's going on here, which is interesting. Now, some you may see, Youngstown State University of Ohio are losing 22 jobs there. No big deal, right? Well, you know what? I guess it all adds up. But again, when we take a look at some heavy hitters now, like American Airlines plans 5,000 layoffs. All right, you've got Amtrak, 20% of its workforce by October. You've got Boeing. Boeing obviously had a very difficult past number, I guess 6 months a year with some of their issues on their airplanes, and they're going to reduce 12,000 through layoffs and buyouts. Now, okay, layoffs are layoffs. People might say, well, buyouts, hey, they're getting a package. Well, that severance package only goes on, for so many months, etc. So really, it's effectively a layoff. And, where jobs are today, a lot of those employees may not be able to find gainful employment right after or even after a few months. So it's going to have some issues. Chevron Corp, 6,000 of global workforce. That's part of the oil industry, which is taking a beating as well, too. And again, this is what has been reported for Friday. If you take a look at the site, it's got basically every day of the month for the past few months saying, hey, this is what's going on. So it really gives an indication that's, we can see the airlines. And again, Delta is going to do, furloughs and buyouts. I mean, there's stuff that's not even on here that we know is happening on a grander scale. So as far as my perspective is that we're going to see a lot more people losing their job, or there's another trend going on is that instead of losing their jobs, people are taking a 25%, 30%, 20%, whatever it is, pay cut to remain employed. And, that may be great because you're still technically employed, but now that extra money, that's not, I mean, extra money, that's just part of what you live on, your budget is now being removed. How's that going to affect your monthly expenses? How's that eventually going to, work into your housing costs, and how's that going to roll out? So we have a lot of things happening, and it's not getting any better anytime soon here. But I thought this is very interesting, job cuts. It gives you perspective of what's going on. It could be minor. It could be, again, 59 employees here, 22 employees there. Oh, 5,000, 12,000. So you can see the range. It's affecting every industry, every type of employment, the whole bit. So it certainly is much larger than I think people really realize here. Okay, whoops, let me go back here. So, of course, that brings us to mortgage forbearance. Let me go back here. All right, so Black Knight comes out with their weekly information. And, of course, everyone's saying, oh, look, the curve is flattening on the forbearance requests, and that's great. Realize that we're at the end of the month. So when they're taking this data, which looks like it's May 29th is when they reported on this, we're pretty much in the last week of May. So your forbearance requests are slowing down. Of course, that happened the previous couple of months. We saw that even though there was still a significant volume, they were slowing down. So really, what Black Knight's saying here is that only 7,000 mortgages entered forbearance this week, Black Knight said, which is interesting. So that brings the overall share of home loans with suspended payments. It stands at around 9%, and it's broken by out investor type. So we can take a look at that. You got your Fannie Mae at and Freddie Mac at 7.2%, which is about 2 million mortgages. You got your FHA and VA, which is 12.6% of loans, about 1.5 million mortgages, and the rest are going to be your typical lenders, your big banks, your credit unions, your non-government-backed mortgages, which sort of rounds out the rest of them. So that's still a lot of people, and yeah, I mean, is it good that things are slowing down? Yeah, I mean, there's no doubt about it. But guess what? That's the end of the month, and here's what's going to happen. Now June hits, so we're probably going to see another small surge in the first week because we're for June today. So probably maybe middle of this week or next week we'll see another sort of increase. I expect that 7,000 to increase for sure, and because we're in a new month. And again, the people who lost their jobs or had income reductions over the past month, might need to jump into forbearance starting in June. So we don't know. So I would expect we're going to see a slight uptick there as well too. So please don't think that we're out of the woods anywhere yet. Again, just as I mentioned before, we're at about 4.8 million. So I'm sure we're going to hit 5 million next month. And you take a look at what's out there. Again, we're looking at about 9% overall mortgages across the board, and each sort of segment has their own issues, which we'll go to the next slide here. So when we take a look at the slide here, basically it's, we can see that, the total is over $1 trillion right now on a monthly basis of mortgage forbearance value, I guess you could say. And, excuse me here. So when we take a look at the three colors, you've got, dark blue being the Fannie and Freddie. You've kind of got the middle blue being FHA, VA, and then you've got the banks, private lending, etc. So, you can see that, when we're looking at May 26, there's less as a percentage on certain segments, but you take a look at that's the value. So on the private banking, you're probably seeing a higher average loan balance than you are on the FHA, VA, but you're probably seeing in Fannie and Freddie, but you're probably seeing more. You're seeing more loans in that segment, more loan counts than you are in the upper, the light blue. So just the way it all plays out. Again, in the end, a lot of people, a lot of issues. This will manifest itself in the next few months with respect to what's going on in the marketplace right now. It is what it is. If you take a look at what's going on out there, take a look at other articles, other sources, so many people are saying we're going to have major problems in housing. And, we're at the tip of the iceberg right now. We're still muddling through the pandemic and the virus affecting businesses, etc. And people are having situations with their finances. So it is what it is. We'll see what happens in the very near future. But don't hold your breath on anything here. All right. This was interesting. Pending home sales plummet in April. So, it's so interesting to see that, we know that pending home sales plummet in April, but demand is showing the signs of a rebound. So really, I kind of go, well, how can they say that? Well, it's kind of straightforward. Is that, I guess you could say, the real stats are from Realtor.com, which basically shows that it fell steeper than expected. So pending home sales, really, it's an index which measures contract signings in April, which really relate to future closings. So we have your future closings being what? In May, in June, maybe early part of July. So you're going to see 30, 45, 60-day transaction timeframes on average. Well, we take a look at it fell a steeper than expected 21.8% compared with March. All right, that was a pretty big number. And I believe it's also, 33% down compared to the year previous. So there you go. It's the largest decline since NAR began tracking this metric in January 2001. So pretty significant, drop there. And again, I mean, kind of the same thing with the new home sales is the fact that, when you can't go out to see property, you're not going to place offers. And if we're sort of, locked down and, there's no, people aren't having open houses or are allowing showings and things like that, that's what's going to happen. You're just going to see less contracts signed. And therefore, that's going to manifest itself again in May sales and June sales, primarily in June sales, I would imagine here. Demand, however, is already coming back, and the housing picture is starting to brighten. So this is why I love the conflicting narratives that are going on with respect to the news reporting here. And I think we all know that you got to take the headlines with a grain of salt here. So pending home sales plummet in April, but demand is showing a sign of a rebound. Well, it's not demand. It's, what if you read this article, what it boils down to is the fact that mortgage purchase applications have increased. So we don't see contracts being signed. We just see that more people are actually, comparatively speaking, from the past number of weeks. I mean, so I guess the point is when we've hit such a low point, through March and April, when there's increases, I guess people will call it a rebound. I mean, is it a rebound considering where it was last year? Probably not. But is it a rebound from a couple of weeks ago? Yes, it is. So really, they're basically saying that the demand is not true. I don't think it's a true demand as of yet, but people are going out because there are lower rates. They're now getting pre-approved. They're applying for mortgages. Now, whether that works its way through to actually going to see a property, checking out homes, put it under contract, getting a sale, well, that's a rebound. Okay, so I think right now we're showing signs just because there's applications that have come up a little bit from a deep low does not really mean we're rebounding as far as I'm concerned. But again, you take it with a grain of salt, and it's up to you to make your own, I guess you could say, decision on that. So this is interesting though. So this obviously was from Zero Hedge, and it's their spin on it, which is always a different spin. And so you take a look at, the sales collapsed, right? Basically, we'll say new home sales collapsed. Sorry. Existing home sales collapsed in April. New home sales somehow rebounded, even though the initial report was massive collapse. And then the revised report said, oh, no, we actually were wrong. It's a big swing, which I still don't quite believe, to be quite honest with you. But that's the way, again, the numbers, that's how things play out. That's what we're being fed here. So which leaves pending home sales to do the tiebreak of what's going on in the marketplace. And, again, analysts expected a 17.3% month-over-month drop. However, it disappointed with a 21.8% month-over-month collapse, sending year-over-year sales crashing 34.6%, the most ever, which is interesting. So obviously from NAR, and NAR reports on this, the housing market is temporarily grappling with the coronavirus-induced shutdown, which reduced listings and purchases. So listings and purchases, but also people not going out. That was the number one thing. People were not going out. So basically, it didn't happen from the home side. Every region crashed. The Northeast fell by about 14.5% on the pending home sales. Midwest fell 22%. The South fell 19.5%. The West led the fall at 26.8%. And again, they mentioned that is the lowest level of pending home sales since records began in 2001, so about 19 years ago. So really, this, as I said, the future will be low sales, and we'll see how that plays out with values, and we'll see if the values continue to rise. But here's a neat graph, shows that, hey, look at the plunging, okay? Big time plunge, simple as that. So there's no denying it. And we go to the next slide here. Let me just move on to that. Sometimes it's slow to connect with this. Okay, cool. This is what I think is interesting. This sort of, we'll call it analysis or discussion points here, I think is important. It says, March historically begins the annual peak U.S. selling season as warming weather spurs home searches and families with children prepare for moves during the school summer break. Typically it is. The summer selling season is the busiest time of the year. That's been drastically curtailed in 2020 as the virus triggers the biggest economic contraction in decades, closing workplaces, schools, and other activities. Now, pending home sales are leading indicators of housing activity based on signed contracts to buy single-family homes, condos, and co-ops typically occurring 1 or 2 months before the closing. So yes, so we know that we're entering the busiest season, which is important, and we're not seeing anything pick up whatsoever. We're seeing it contract big time. So obviously that's going to play out difficulty for home sales. We may see a flurry of June, July type activity where people are buying and closing quickly, based on how things are opening up across the nation. We'll see how that goes. This was a interesting comment, though. It says, the reason this is significant as it takes 4 to 8 weeks to close the sale once the contract has been signed, which again, 30 days, 45 days, 60 days on average. So this huge drop would indicate buyers forfeiting the deposit and walking away as they think the loss on the purchase would be higher than the deposit itself. So to me, that's a very interesting statement. And why I say that is the fact that, if you go under contract and you go, you know what, I'm going to bail on this contract because I think I made a bad decision. Well, what's your typical earnest money deposit? Maybe 1 to 2% of the purchase price. So if people are going, hey, I can lose that deposit because I'm back out of the sale for whatever reason, and they're willing to do that because they feel that price points either are going to be lower and values be lower in the near future. I think that tells us some underlying messages about where home buying sentiment is right now and where people think the market is going. So we don't really hear too much about this because it's not what people want or what the media wants us to hear. But again, I do think that's an important point to make, is that if this is the case, people are going, ooh, I made a mistake and I better pull out of this now before I cause myself more financial problems in the future. Whether this is a price point scenario that they think prices are going to drop, or whether this is more of a preservation of personal economy, like i.e., I am not confident in my job or I'm not confident in the recovery, I think I better bail now because I may find myself in a poor financial situation in the next 1 or 2 months. I mean, that, again, we don't know those are the two things that could possibly happen as far as I'm concerned. Either you don't believe the market's going to hold, it's going to drop, and you don't want to get caught. As they say, you don't want to catch a falling knife, or you don't want to be in a financial bind and overextend yourself. So that's kind of your situation with respect to what's going on in the housing market. So I didn't want to go on too long today. I got some other stuff coming out next little while on foreclosures and things like that, because there's certainly a big push and move on to what's going to happen in that part of the industry, and we'll talk about that next video. So having said that, I appreciate you guys hanging out with me today, and hope everyone had a safe weekend. Certainly reach out to me for your housing question needs and whatever. I've got a lot of people I'm getting back with. Surprisingly enough, a lot of people are looking to buy, and if we can help you do that, that'd be great. If we can help you save money along the process and buy effectively, that's the goal here. If you're looking to invest in properties, I got a lot of stuff. Again, I was looking at a bunch of properties last weekend. We're going to be moving on, and I'm moving to other buyers, etc. So the time is now. I mean, as I always say to people, and I'm very clear on the video here that I'm not endorsing anybody to go out and make foolish purchases. I'm endorsing people who, if you need to buy, because people do need to buy for life reasons, and I get that, and I think we all should get that out here, try to buy as effectively as possible. So again, please reach out to me if you need any assistance with anything. You've got my email up there. Email is the best way to reach me. I can get back to you, and we can plan a conversation from there, have a quick consultation. And again, appreciate the views, likes, comments. Look forward to speaking with everybody in the next couple of days. All right, everybody take care.